Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have with us Biran Herndon, who's the president of Elite Tax Advisory Services, and we're going to be talking today about Social Security strategies. Biran, welcome to the program.
Thank you. I greatly appreciate you having me on today.
Hey, you're welcome. I look forward to learning from you, and it's always neat to see people's entrepreneurial journey. So give us a little bit of background. What led you to the tax and the retirement planning industry?
Well, I started off when I was 17 in the tax prep industry with one of the major national tax firms. Found out I really liked it. 30 years later, I've been in the tax and financial game, so I have seen all kinds of things change, and my goal is to make sure that you pay as least amount of tax possible with making smart choices with your money.
You know, it's interesting that you phrase it that way, and it makes me think of the proverbial bucket of water with holes in it. You know, a lot of people feel like, show me how to make more money and pour more water in that bucket and get more. But that is a valid, need. People need more in that respect, whether it's business income or personal income. But you need to plug up as many of the holes as possible. And we know that you can't plug up every hole, but keeping those tax strategies in place, plugging up some of that outflow is such an important piece of the equation.
Absolutely. If your bucket's got a big spigot at the end and you're pouring it in and it's going out as fast as you're pouring it in, you're not gaining any ground.
Yeah. Yeah, I mean, you hear that on Shark Tank so many times where people say, wow, we made $1 million in revenue last year, and they're like, well, wonderful, that's so great. And what was your net profit, or what was your, the numbers? And it turns out that in some cases they spent $1.1 million to make the one, and you're going backwards. So you can't look at that top line. You have to see when the dust settles, what is there. So I think that those planning strategies are so important. Tell us a little bit about. Obviously, the word when is so important. When should you start planning for retirement? When do you plan tax strategies? And obviously, I know that earlier the better, but let's go in a little bit deeper than that and talk about when some of these planning strategies should be implemented.
Ideally, you should be looking at least 10 years before you retire and starting making plans for that. That 10-year period gives you that time frame where you can develop strategies and plans, and if there see something along the way that needs adjustment, it gives you time to make adjustments.
Now that requires that 10-year time frame requires that you have an idea in your head of when you want to retire, and I think a lot of people, that's a date or a number that they really are fuzzy about, right?
Right, and it's a very fluid situation because retirement can mean different things to different people. So
yes,
basically, when you're ready to unhook yourself from your paycheck and go out on your own, that's when you should be planning 10 years from there.
And I really think that a lot of people don't calculate in, the purpose of what we're talking about today is just some good Social Security strategy to kind of get you thinking in that direction. Because I think around the same calculation of when should I retire factors in this Social Security, because you can claim it at a multiple variety of ages. So talk a little bit about claiming Social Security, some of the things to keep in mind. Can you claim early, late? What are some pros and cons of that?
So you can start claiming Social Security as early as age 62. You can delay holding Social Security all the way up to age 70. And there's 100 different calculations and variations in between. But the general rule is the longer you wait to claim it, the more you're actually going to get in your monthly check. So if you claim it early at 62, you're going to take a 25% discount. So if you had a check at your full retirement age was going to be $2,000, and you decide to take it early, your check's now only $1,500 a month. So by taking it early, you just lost $6,000 a year. You know, if you got a 25-year retirement, you just gave up $150K of income.
Wow. Yeah. And so now let's think about something. Those two ages that you mentioned, someone may say, well, I need that money, right? So yeah, I understand the $500 a month swing in the two numbers. You know, what are some ways that you might recommend, you know, closing that gap?
So when you sit down and you got to look at your overall situation, you got to look at what income you got coming in at the time frame, your age and health. If you think you're going to be on the short end of the longevity scale, then it might make sense to go ahead and take it earlier. If there's a situation where you're needing the funds or you desperately need that income, then you got to do what you got to do. So, but if you can delay, the more you delay, the bigger your check gets. Part of an overall plan, though, is if you need to do it early, you need to start looking at all your buckets of money and how they're going to come out. If I need a little more money and I need something now, do I take some money out of my 401k? You know, do I invest and try to make difference? So that's all part of that, needing that plan. You know, it's just like if you were going to drive out of state somewhere, you're going to look it up on a map. You're not going to just, well, I'm going to drive to New York, so I'm just going to head north from Florida, and I'll hit it eventually.
Yeah, hope for the best.
Yep. So having that roadmap allows you to choose. Then if I can pull from this bucket, I can delay this bucket. If I do this, it will give me, you know, I'll pay less tax, then that'll give me more income. So it's that variation of the plan that you have that you can choose between different options.
You describing that makes me think of, for some odd reason, playing chess. And when you make a move and you keep your finger on the piece and you look around, you're like, okay, is this the best move? Okay, now I'm going to take my finger off. But until you take your finger off, you can still, you know, pull it back or make a different move. Well, in many financial strategies, you still can keep that finger on the piece and go, I'm going to kind of change that. But am I correct in thinking that when you make Social Security choices, that figure's off the piece and it's irrevocable? You don't get to change your mind or pull it back or change strategy. So that's why this is such an important decision.
It's very rare that you can undo your decision. I mean, there are some situations, but it is extremely rare and requires an extreme amount of planning. But pretty much that's correct. If you make whatever your election is, you're stuck with it forever. Yeah.
And I would suspect that, you know, like your example that you mentioned a minute ago about starting to make plans 10 years out, some of those things that you can do in advance of retirement age, in advance of making Social Security elections, could help with maximizing your Social Security income. Are there anything that people could do specifically that could help to maximize their Social Security income when they do make their elections?
Well, obviously, waiting as long as possible is your first choice. You know, if you wait past your full retirement age, you gain an extra 8% a year up till 70. So if you can wait longer periods of time before you take it, that's usually the preferred one. That 10-year window is where your peak of your earning years, so that's a good time to look at. If you're earning more, how do we earn it in a little better, different way to maximize your monthly check? And one of the things that people just keep over missing is there's a lot of opportunities if you're married looking at spousal benefits. You know, there's over 100 different calculations on how you and your spouse can take your benefits that, you know, going through that process could actually increase, your check, maybe $1,000 a month extra doing something like
Wow.
that.
Yeah, I think a lot of people don't think of it that way, where it's like, okay, well, we're both around the same age, let's make the same decision, but maybe it makes sense to make decisions separately for the greater good.
And that's the thing about the whole planning process is there's choices for you as your individual. What do I do for my benefits? Choices your spouse can make. What does she can do for her benefits? And then what do we do together? And a lot of times, sometimes it might be more beneficial for a spouse to start early and you start late. I mean, it all comes into running the numbers to see what's best overall picture.
And you said running the numbers, and I know you're a numbers guy, and I know for me, the only B in grad school that I got was in corporate finance, and for me, B is fine, but it's still all A's and everything else. But for me, numbers just make my eyes glaze over, and so it makes me think of there's a big difference between seeing an Excel spreadsheet of numbers and understanding what to do about them. So I think that you can find so many calculators out there that maybe even, you can Google around and go, what should I do about Social Security? Well, we all know, getting advice from Google has its cautions, but what would you say to someone about kind of getting their advice from online or tools like that? Even if it does have some calculators and numbers, you might miss out on how to interpret them for your own specific situation. Would that be an accurate assessment?
Absolutely. Knowing the numbers is one thing, but knowing how to make the numbers work for you is the part that's where you win the game. Make the numbers work for you.
And you mentioned a couple times.
I'm sorry, go ahead, Mike.
I was just going to say, you mentioned a couple times like 100 different ways, quote unquote, 100 different ways. And I don't think you're exaggerating and using that as a generic phrase. I think that there's dozens and dozens and dozens of options and calculations. So it really is something important to see what those numbers mean to you specifically in your situation.
Correct. And in our world, when you look at tax preparation versus tax planning, tax preparation is in essence, all you're doing is recording history. You're putting numbers in boxes. Tax planning is how do I change those numbers? Well, it's the same thing with Social Security. You can go in and there's hundreds of free calculators on site. You can plug numbers in, but you're not getting the best outcome. You're not changing the best strategy for you. And that's why sitting down with your numbers and saying, okay, here's all the different variables. Here's all the different choices. Here's your break-even analysis. All right. Here's our game plan. I think you should do X, Y, and Z on June 1st this time.
Yeah. I think it's an engineering term, but IFTTT, if this, then that. If you do this, here's what happens, right? So like you mentioned about, well, if you took this, financial move, what's the domino cascading effect that will then happen? And it's almost like you can envision the Excel calculations. You change one cell and all of a sudden, boop, it just refreshes to this. And you're like, okay, well, let's see here. If we made this change, then look at what would happen. Is that a good thing? Let's see here. Well, what if we made that change? And I think that's the big difference between, Googling your situation and knowing what specifically would be, and then you narrow it down to a few, and then maybe it is something where it's like one spouse takes this, or together you do that, or you delay, or you take it early, and like you said earlier, I think that something that really, really needs to be refreshed is, yes, delaying will increase what you could get per month, but there are many cases where you need it now. And it doesn't matter. Yes, we know that you're going to get more later, but because of your personal situation, whatever that may be, we need to claim now. And I think that's something important for people to remember and not feel bad that they didn't wait, right? Your situation warranted that you need to claim it now for the support of your family.
Correct. And then you can use multiple different types of claiming strategies then. So again, back to, well, maybe your spouse takes it now and you delay. Mm-hmm. Or we start doing different types of, again, looking at income buckets to how do we overcome shortage now or need now for shortage in the future. So that's all part of the overall plan. And just more importantly, is what you're planning for in life is how you claim your Social Security effects in death too. You know, yeah. we see a lot of people who go online, do some quick calculators, and life's good till one spouse dies. Now the other spouse is short $3,000 a month for income that nobody thought of.
Yeah.
Well, that's something else you have to really keep in mind is you're not making claims for now for life. You're also making claims for who gets what when you pass away.
Yeah, that's a holistic, full, comprehensive approach. And I like your example about filling in the blanks for tax prep and tax planning. One is looking backwards and one is looking forward. So that's a really good point. You know, we were talking about Googling or finding information online. I think a lot of people would kind of nod their heads and go, yep, can't trust Dr. Google for that, ailment that I'm facing. So we know that, but it's helpful just to frame up, what you're going through. Same way you cannot get your, high level financial planning from Google, but so many people would visit the Social Security website and see that they've got a massive amount of helpful material. They might even have a phone number they can speak with someone. So why couldn't someone just go and say, let's just go to the source. Let's just talk to Social Security and they'll tell me what to do.
Well, I will agree. Social Security on their website, ssa.gov, is an awesome source of information. The problem of that information is it's static. And the same thing when you call and talk to somebody at Social Security, you're only going to get answers what they can give you, A, that they have time for to give you answers, and B, it's only going to be general information. It's not going to be that same customization that you can do with a qualified Social Security expert of, if you guys change the chess pieces around, how does the game look? Yeah. They're just going to say, okay, here's your benefit. If you wait to this date, it's X. If you wait to Y, it's Z. And it's very static, generic information they're giving you. There's no customization.
Yeah. That's a good point. And they kind of, you're kind of like a cookie cutter stamp, next. They're not really diving in deep to make sure everything is right for you.
Plus, just like the IRS manual, the Social Security Handbook to their agent says that they're not responsible to give you bad advice. So
yeah, well, and we talked about tax code and whatever before. I can only imagine how thick the tax code is. The Social Security, handbook. There's no way that they would know how all of that applies to one person's situation. And then now someone would think in their mind to go, okay, got it. I need to go talk with someone that's a financial professional. So good. I'm going to go talk to my banker who handles my money, or my insurance agent that did my homeowner's insurance, because they, have a blog post on their website about Social Security. So I guess that's good enough. What's the difference in working with just a general financial professional and versus someone that really has a deeper knowledge of Social Security and how that works?
Well, I can give you a real life example. A client of mine came to me just this week, and we were crunching numbers, and they gave me the report that their financial guy had printed out for them, and it showed recommended from some software to go do this strategy. But we got talking a little bit and found a little bit that he was taking care of his minor grandchild now. Like, well, if we change it and do this with minor dependent, you're going to gain an extra $1,000 a month.
Wow.
So that saved that client got another $12,000 a year just for one simple change.
Wow.
And it is software. The flaw is software is two things. One, it assumes the person putting the data in knows what they're doing. And two, software only does what you tell it to do. So if you don't go and rechange that one cell in the Excel spreadsheet will do this, software is wonderful if you know how to work it. But if you don't tell it to do something, it's not going to do it.
It's like they say, garbage in and garbage out, right? G-I-G-O, and that's from way back in the day. But that example you mentioned is so important. And I know, disclaimer-wise, that it's not guaranteed for every single person that you can find an extra whatever. But I think that the human element, almost like a forensic, you were thinking outside the box. You were making sure that all their bases were covered. You actually, in the medical field, you see the TV shows where it's like, that bedside manner, and they spend enough time with them to understand, oh, well, didn't you say that? Well, you knew about their dependent grandchild, and you knew that could affect, and that one printout that didn't reflect the responsibility. And maybe that other person didn't know to ask, or they just didn't realize it. Your client might not have mentioned it. They might, I didn't think that was important. You did. And I think that's right there is such a huge example of making sure the comprehensive everything about their lifestyle, their family, their needs is taken into consideration. And now, could you imagine taking the finger off of that chess piece per se and finding out that you could have had $1,000, $1,200 or $12,000 a year more, but we didn't know to put that calculation in.
Right.
That's a huge, huge example. Boy, that's really good. Thank you for that. Let's wrap up with this, Biran, because this is something that is so important. We've talked about, planning 10 years out and making the right moves and making sure that all the bases are covered, not just filling in the blanks. If someone was interested in connecting with you for maybe a second opinion or just a 30,000-foot overview of what they might be able to do with their retirement and Social Security, what's the best way that someone could reach out and connect with you?
Well, you can go online and schedule. We'd love to talk with you. We always offer a free consult. My website is www.elitetax1040.com. You can click on the website. You can request an appointment, get more information, or you're welcome to call the office at 772-774-7808.
Well, Biran, thank you so much for coming on today. It was a pleasure talking with you and learning from your expertise.
Thank you, Mike. I really appreciate it, and I had a wonderful time. Hopefully, your listeners did too.
Thank you.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneurssradio.com.